Do you own voluntary life insurance at work? Well, if you do, you're probably paying too much, especially if you're a woman. You're going to want to listen to this video if that's the case. I'm Michael Girali with Bespoke Healthcare. On our YouTube channel, we always talk about things related to retirement and healthcare. And today we're going to talk about voluntary life insurance versus the new options that are out in the marketplace for life insurance. Before we get started, please subscribe to our channel below so that you get notification of videos when we put them out. And certainly leave us comments, which we'll discuss at the end of this video. So let's get started. Um, we believe that a lot of people are paying too much for their employer group term insurance. And what does that exactly mean? Well, it really means that you're burning money. And today, with all of the inflation that's going on, higher gas prices, higher food prices, we know everyone is looking to figure out ways to give their budget some relief. And this may be one of those ways. We'd rather you take those dollars and keep them for yourself and use them in areas that really are beneficial, or even again, just to keep up with that inflation. So let's talk a little bit about voluntary group life insurance through the employer workplace. First of all, these are some of the highlights. Typically, there's going to be a guarantee issue amount for the employee, maybe for their spouse and children. So, as an example, an employee might have a guarantee issue amount of 100,000, and then they could purchase 50,000 or 50% for their spouse and 10,000 for their children. Now, this is going to be vary depending on the group. Also, the larger the group, then typically the higher the guarantee issue amounts will be for that group. Premiums are broken down into increasing 5-year rate bands. So that just means that if you're 34 today and you took out a policy with your employer, it's most likely going to go up at the age of 35 and then at the age of 40 and so on. One thing to always remember when we're talking about this is that, again, certainly employer groups are different. So we're trying to give you an idea and an overview of what we see and have seen with our clients over the years. Term coverage typically has no cash value. Matter of fact, all the time it has no cash value. So that just means that you're paying for that coverage. Once you give it up, then that goes away. There's no cash in the policy. Some policies will allow for portability, meaning that you can take the coverage with you. You can take that term coverage with you if you leave your employer. This, again, is not the case with every company. So check your company and see. And then some policies have conversion privileges where you can actually convert to a permanent policy, but these tend to be fairly expensive. Um, with both of these options, a lot of times employees are not aware that these are available to them when they leave a company. So, some things to be thinking about. And then a lot of plans have accidental death and dismemberment benefits. Sometimes it's broken out of the life insurance, so you have to choose it optionally. And sometimes it's built into the life insurance. And this essentially just gives you an additional death, or excuse me, additional benefit if you were to die in an accident or if you were to lose the use of your eyesight or limbs, something like that. Um, and again, most plans with in the employer marketplace don't have living benefits. Living benefits are essentially where the insurance company, if you have a serious catastrophic type of an illness, they will go ahead and allow you to accelerate some of that death benefit to use for different things like, paying for out-of-pocket healthcare costs or taking care of your family while you're not able to work. Most of them do have a terminal illness where they will allow you to accelerate the death benefit if you have less than 12 months to live. Um, and then what are some of the alternative options in the marketplace? As I mentioned at the beginning, there's been a lot of changes to the marketplace. insurance companies are trying to make it easier for people to purchase insurance. And then they're also adding things like living benefits to make it more attractive for purchasers of life insurance. So we start with annual renewable term, and that's basically we're going to buy a policy. It's going to go up. The premium's going to go up every year. So you'll as you get older, those premiums can really be significant. Then we have levelized term life insurance, and that allows you to choose the term that you want. So if you needed it for a certain period of time, you could do a 5, 10, 20, 30-year term. That is dependent on your age. So as an example, most 50-year-olds, once you hit 51, you're no longer able to buy a 30-year term policy. Um, then we talk about, so those are two different types of policies. Let's talk about some of the underwriting. So we have now what we call instant issue policies, and that's effectively where you're not going to have to go through a medical exam or a paramedical exam, or somebody comes out to your house. You're not going to have blood or urine. The insurance company is going to have you complete an online application, and they're going to make a decision whether to approve you or decline you within a matter of minutes, 10 minutes in most cases. So that's one option. These are going to tend to be a little more expensive potentially for premiums, for the fact that the insurance company is not doing a full underwriting. Then we go to what we call accelerated issue policies. Those also have no exams, blood or urine tests required. You still complete that same online application, but the insurance company is going to take a little more time. They may ask for records from your doctor. They may look at your prescription usage. And then because of that, they're taking longer to underwrite it and look at your situation. Oftentimes, these policies are going to be a little bit less in premium than the instant issue policies. And then we have contingent accelerated issue, where kind of the same thing. Initially, you don't have to do an exam or do blood or urine, but the insurance company reserves the right to come back and request that you have an exam if they see something in your records from your doctor, your prescription usage, so forth. Then they can always come back. And then finally, we have traditional underwritten policies, where those are plans that you fill out an application, again, paper or online. And then in most cases, you're going to have to do a paramedical exam and also give blood and urine. And then they will sometimes request doctor records as well. So those are some of the different types of options out there, and then how they're underwritten. Now, when we're talking about these instant issue and accelerated issue where they're not requesting exams, they're going to be looking at traditionally four things. They're going to look at the Medical Information Bureau, which is where a lot of data about any conditions that you might have had, hospitalizations, is stored. So they're going to look at that. Again, by you signing that application, you essentially give them access to do that. They also look at your prescription drug usage through the prescription drug database. So that's another area that they look at. LexisNexis kind of looks at different algorithms and financial information. So that will help the insurance company as well. And then finally, motor vehicle reports. They're going to look for DUIs or any sort of issues from a driving record standpoint. So just a couple of examples of now where are the savings potentially with an instant or an accelerated issue versus your group term life at your employer. So this is a 30-year-old female. We're assuming we're comparing this to a 30-year term policy that she could buy, and we're looking at whether she was preferred or standard versus that group term, which we used one of our clients as an example here. So on a preferred basis, her premium was 64.50 annually, and that would be out for 30 years. Over that 30 years, that same employer group term would have been 16,950. So she had a 62% savings in this case. If she was rated standard, that savings goes down. to 24%. But again, you can see this is the instant issue and that there's some significant savings there. When we look at the accelerated, um, the savings are even greater because, as we mentioned, the insurance company has a little more time to do their underwriting. So they may be a little more favorable in that. So there's a 65% savings and a 35% savings. For males, kind of similar things, although in the case of the instant term with this example, the male cost, if they were rated standard, was actually was higher overall than what the group term life was. So in this case, there would not be a recommendation to move to this type of a policy if somebody received that type of a rating. Um, and then 50-year-olds. So as we get to 50-year-old, the costs go up significantly as people age. And there's tremendous savings here, both on the instant issue of 76% um, and with a preferred rating and 43% with a standard rating. And then when we go over to the accelerated, it's 82% and 68%. And then males, not quite as much. And you may be asking, so how come women, and I mentioned this at the beginning, how come women are paying more and saving more? And that's because most voluntary group term life uses unisex rates. So they average the rates between males and females, and females tend to live longer, so their mortality costs tend to be less when they're older, certainly. And that's the reason that for a lot of women, if you have group term, you could see some really significant savings. But again, men can as well. So what are some of the advantages of looking at outside of your employer to purchase insurance? Well, one advantage is it's fully portable. You own the policy, so you're going to take it with you when you leave. You don't have to go through determining whether or not your company offers that. I mentioned earlier, some policies have living benefits. This could be huge, especially when we're seeing today some of the costs that maybe not covered when somebody has a serious illness. Some of the cancer treatments that are considered experimental for somebody in that case, if they had an acceleration for a catastrophic illness, they might be able to use some of that death benefit that was advanced to them by the insurance company to pay for those experimental treatments. Um, the other point is that the premiums are level for that period. So if you choose a 30-year period, those premiums aren't going to change as long as you make your premium payments. So I mentioned the sex distinct, where women and females tend to have lower premiums. And then if you're very healthy, you may want to look at getting a fully underwritten policy if you're willing to do blood and urine, because traditionally, if you're very healthy, you're going to get a better rate than either the instant or accelerated term. Now, what are some of the disadvantages? Well, again, we mentioned no guarantee issue. So you've got to go through the underwriting piece of this. So you could be declined, whereas that employer coverage is going to have some amount. Remember one thing though, for a lot of employer coverage, you have to sign up when you're first eligible for it. If you don't, then they can ask you health questions. Again, no guarantee issue for spouse or children like there might be on group coverage. Premiums can be lower in the early years. On those charts, you probably saw where the group term in the first 5 years, sometimes 10 years, might be less. But over the long run, we find that the level term is going to beat out that employer voluntary coverage. And then payroll deduction. You've got the ability to have those premiums taken out of your payroll, whereas if you go outside, you're going to be having to pay that premium either through a bill or through some sort of a credit card or bank account. Now, one thing we want to do here, because a lot of the times, we talk about things, but we really want to kind of offer a challenge to you if you're watching this video. You're going to see two QR codes, and the first thing we're going to say is, you probably should calculate your needs. You may have done this, but how much insurance do you really need? So we have both a link here and then a QR code where you can go out one of our insurance companies that we work with has created this calculator. You can go through and it will tell you, or at least give you an idea of how much insurance you have. That's one of the biggest questions that people ask us is how much insurance should I really have? And then second, after you've done that, you can go to the accelerated, which we've added here, because again, we kind of mentioned that that's in between. That's hopefully going to be a little bit less than the instant, but it's going to be easier than doing full underwriting. So on the QR code, you can click there and it'll take you right to the quoting site where you can run quotes for that accelerated term insurance. You're going to want to take the amount that you chose. Or that you found on the calculator, or what you take use the amount that you currently have at work to add as the face amount. And then when you run that quote, they're going to ask your date of birth, whether you're a smoker or non-smoker, what the length of time you want for coverage, your state of residence, and gender. And then when you get to what they'll ask, which are your health status, you're probably going to want to run two options. That's basically what we did in these examples. Run a preferred plus and run a standard. So then that way you've got a range of what those premiums could be for coverage to compare then to your employer coverage or even other coverage that you might have. Um, and then finally, we'd like you to post just kind of what you find in those findings at the bottom of this video, in the comments section. Go ahead and post. You don't have to give us exact details, but just let us know if you found that in your case that there were savings there for you. And then if you do see savings, if you have an agent that you work with, you're going to want to contact them and let them know the results, and they can probably help you. If you don't have an agent, then through the process of quoting, you're gonna actually see Start app. So if you wanted to get coverage, you could do that. You can also schedule a call with us to, and we'll answer any questions that you might have. And that contact information will be at the end here. So that's pretty much it. Just a couple of resources that we have for you. One is we do co-host a webinar with Tom Hegna, who's one of the world's leading economists on life insurance and how it can power your retirement. Again, you can scan that QR code and go to that. There's no cost for this webinar, and you can really schedule it whichever time works best for you. Then, we gave you one quote for the accelerated term life, but on the right-hand side, you're going to see we've got a quoting or a QR code that'll take you to multiple sites. So you'll be able to quote what that instant term looks like, what the accelerated looks like. There's actually an instant term that has a return of premium. So that if you paid into it for 20 years and that was your term and you never used it, then they would actually refund all of those premiums to you. And then finally, because we know a lot of employees, as they get closer to 65, they're going to lose their group employer paid life insurance, which oftentimes is 50,000 or one-time salary. Since that's going to go away, we've also added a whole life option in there that you can quote and see what a permanent policy would look like as you get closer to retirement. So just a few resources there. Our contact information is also in the middle, and we hope you find this valuable. Again, Michael Girali with um, Healthcare Genius, and thank you for your time. Have a great day.